Hello, guys. Welcome back to my channel, The Bulletproof Life. It's your girl, Ronke Odewumi, and I'm delighted to be doing this live with you guys today. I promised I was going to come back again on the live, and again, I'm here to chat with you, to do your lunch time with you, and to just generally spend time with you. If you're new to my channel, if you are stumbling on this because you're just passing by on YouTube and you've been told about this live, this is the Bulletproof Life channel. We talk about money here. If you haven't subscribed, please do it by pressing the red button on your right. Don't forget to press like for this video. Please, please, please smash the like button so that YouTube can share this video with other people like you. So today is Thursday. I normally come on here to share a video. I normally share a video on Thursdays where I talk about all sorts, either money, budgeting, saving, investing, or something like that. Well, last week, Thursday, I was on here live and direct to talk to you guys. And I had a lot of positive feedback from you guys. You guys really enjoyed the live. So I decided to come back again today to spend your lunchtime with you. So if this lunchtime live is something you want us to keep doing, please drop me a comment in the comment section so that I know that this is something you want us to keep doing and we can keep doing it. So today I've got a lot of information for you, so many things to share with you, so many updates to talk to you about, so many wonderful updates that I know for a fact that you're going to enjoy. So I can't wait to just get started on this update for you. So um, take a seat, get your lunch out of the fridge, put it in front of you, get ready, and we're going to get started. Now, the first update I'm bringing to you is about Tesla. Yes, I'm bringing you updates about Tesla. If you've watched some of the videos on my channel, I talked about growth stocks that you should be buying, shares that you should be looking to buy, and Tesla was one of them. Yeah, I told you that it was cool to buy Tesla. And that was, I think that was in March. And since then, Tesla has performed interestingly. Tesla has done a lot of interesting things. Let me get into the Tesla update very quickly. So sometimes last year, Tesla started to peak. It started to do great. It started to rise. The price was rising. Elon Musk was declared, I think it was the second richest man after Jeff Bezos or something like that. Tesla prices peaked at $880 in January this year. And as at that time, it wasn't a good time to buy Tesla, even though it was a lot of hype. Then Tesla started to drop. It was experiencing a drop in price from April, and it went as low as $563 in March. As at that time, there were people who were part of my bulletproof community who I kept saying, please buy Tesla shares, please buy Tesla shares. It's happening. I need you guys to buy Tesla shares. And a few people listened to me and bought Tesla shares at that time. Well, Tesla price have then begun to rise. They started climbing again. And as at today, as at this morning, Tesla price is sitting at $668. Yes, Tesla has gone up to $668. So if you bought it at 563, you're already making money on your Tesla shares. So the question now is, should you still be buying Tesla? Is Tesla a buy right now, even though it started rising? Well, 34 Wall Street research analysts have issued different instructions around Tesla. Some have said you should buy, some have said you should hold, some have said you should sell in the last 12 months. But as at now, there are currently 12 sell ratings, which means you should sell. 12 analysts have said sell. 13 of them have said you should hold it, and 9 of them have said you should buy the stock. The consensus amongst Wall Street research analysts is that Tesla is a hold. And I agree very much that Tesla is a hold. If you've already bought your Tesla stocks or Tesla shares, please don't sell it. Hold on to it. Maintain your existing position in Tesla. Don't buy any additional shares. And don't sell the ones you have, because I believe Tesla is going to rise a little bit more. It's going to get to 700. I'm very confident that Tesla will get to 700 within the next 12 months. So Tesla is one for you to hold if you've already bought it. Now, if you are somebody who wants to invest in what other Tesla buyers are buying, there are other people who have also bought Tesla like you. What are they buying? What are they investing in? What should you be buying if you want to imitate those people? Because you probably have similar risk levels if you're somebody who's bought Tesla shares. So other people like you who bought Tesla shares have also bought Netflix. They've bought Alibaba Group, and I think Netflix was on the list of growth shares I said you should buy. So yeah, so they bought Netflix, they bought Alibaba Group, they bought Advanced Micro Devices. A lot of people have also bought what, Disney. Yes, many people have bought Boeing, they bought Square, and people have also bought Alphabet, the guys that own Google. So if you are somebody who is looking to buy similar shares with other people who have also bought Tesla, then you need to be looking at these shares that I just mentioned to you. PayPal is another one on that list. Now, if you're somebody who wants to buy an alternative to Tesla, you don't want to buy Tesla, you don't want to buy what other people who have bought Tesla have bought, you're looking to buy Tesla's competitors, people who are likely to hustle for the market with Tesla, then you need to be looking at Ferrari and General Motors, because when compared with Tesla, using factors like earnings per share, price per earning ratio, their valuation and things like that, these two companies beat Tesla quite comfortably. So if you're not feeling very confident in Tesla, I mean, you don't already have Tesla shares, but you want to buy shares and you want to buy shares within that same space, then you want to be looking at Ferrari and General Motors as alternatives to Tesla. For anyone who is joining us on Instagram or joining me from Facebook, hello, welcome. This is the Bulletproof Life channel, and it's your girl, Ronke Odewumi. And today I'm giving you investment news, investment updates, live and direct. I'm telling you as it is, live and direct today, right here. You're not getting a recorded video that's been made a few days ago or a few weeks ago. You're getting it live and direct. We are doing this together today, right here. And what I just finished sharing just before you joined this video is the news about Tesla, about the fact that Tesla shares have begun to rise. Tesla had a dip in February and March and went as low as $563, but it started to rise again. So if you already have Tesla shares, please, please, please hold on to it. Don't sell it, and I wouldn't say buy more, I would say hold on to it. If you're interested in buying alternatives to Tesla, then you want to be looking at Ferrari and General Motors. And if you're somebody who wants to buy what other people who have bought Tesla are buying, then you want to be buying PayPal, you want to be buying Alibaba Group, and you want to be buying Walt Disney. That's that. Going on to the next bit of news I have for you, it's Deliveroo. Deliveroo declared its IPO yesterday. Was it yesterday or day before yesterday? They delivered the IPO yesterday, and the headlines in the Financial Times have declared the Deliveroo IPO the worst IPO in London history. It's a flop. The Deliveroo IPO has flopped, and this means that the FTSE 100 is set for a flat start this April. Traders are unhappy, investors are unhappy. A lot of people did not expect the Deliveroo IPO to flop the way it has flopped, but that's exactly what it has done. And investors and traders are wondering what this means for the UK tech sector. Does that mean we need to start avoiding IPOs? Does that mean we need to start worrying about tech IPOs? Because Deliveroo IPO has not performed the way we expected, and it has hit the confidence in the whole sector. It's going to put people off listings in London. Just Eat takeaway shares, which was also rising before, has started to fall sharply in London as well. And the question is, maybe we are already thinking we don't need takeaways anymore. Maybe we are thinking, well, we are coming out of lockdown in a few weeks, so we don't want to do takeaway anymore or something. But Deliveroo right now, the IPO has flopped, and nobody is really sure why it's flopped. I mean, it's just a new IPO, 2 days old. But whatever the cause of that flop, shareholders are watching it very strongly. I mean, this is day 2 for it, and everybody's watching it. They are curious to know how much of the green shoe option, which is the shares that the people who floated it have kept aside, are now being used to stabilize the market, which means to just prop it up. So that's the issue with Deliveroo right now, and I'm bringing that to you hot. And if people have suggested that the reason why Deliveroo has flopped, hi Chawe, thanks for branching in, is because of the date. People have said, why has it launched 2 days before the end of the first quarter? Why has it launched, just before the Easter holidays? Traders don't want to take a risk at this time, because of the end of the quarter, end of the before a bank holiday when a lot of things have happened. So that's something that's been suggested as a reason for why the IPO has flopped, which brings me to the fact that there are some factors you need to consider before buying a UK IPO. And I have a number of 5 factors that I consider before putting my money into a UK IPO. And those 5 factors, I want to share them with you in a separate video. So I'm not going to talk about them here, but there are 5 factors I consider before putting money in an IPO. And these are 5 factors you also should start considering before putting money into an IPO. So I want you to watch out for that video where I talk about those 5 factors. It's going to come. Worry not, those 5 factors are going to come. They are very, very important. Once you start watching out for them, you're likely to avoid flopping IPOs like what's happened with Deliveroo. Now, some things are changing today. Today is the 1st of April, and I should have said to you guys first, welcome to the month of April. I'm sure you received a lot of welcome to April message, all sorts of prayers today. But there's something special about April. April is a month that is special for your finances. It's very important for your finances. A lot of things are going to change this month. Today, 1st of April, a lot of things are changing with your finances, and I want to tell you about them just in case you don't know them. The first thing that's going to change about finances in April is that repossessions are back. So in the last few months, the UK government has told the banks to put a hold on repossessions for people who can't make up their mortgage, people who can't pay their mortgage. The banks have put a hold on it, and they've said, we'll give you some time to get that money because of the pandemic. But repossessions are back as of today. It means that banks, on a case-by-case basis, can now repossess your home. Financial Conduct Authority has said mortgage lenders can now enforce repossessions on homes from people who are unable to make mortgage payments. Big one. It means you need to be talking to your lenders if you are struggling with your mortgage payments, because they are now in a position to take away your homes from you. That was paused during the COVID lockdown, but it's back now. And even though they've told them they can do it, they must adhere to strict guidance, and it's a last resort. So I'm not saying that the moment you miss your mortgage payment, you're going to repossess your home. That's not what I'm saying. But I'm saying repossessions are now back on the table. One of the things that we also enjoyed during the COVID pandemic was payment deferrals on loans, on credit, on mortgages, and all of that. Those things are now over. So those struggling to make payments can no longer apply for a deferral on a mortgage or a loan or a credit card. Now lenders want you to make payments every month. Starting today, payment deferrals are back. Payment deferrals are over rather, and you now have to make payments on your loans, on your credit purchases, and all of that. I mean, there is a case-by-case basis which they will consider you, if you are vulnerable and all of that, but payment deferrals are over. The other thing is that council tax bills in England and Wales are about to rise. Hell, they will vary by council, but an average of 4.4% is expected on your council tax. There are no increases in Scotland, but in England and Wales, council taxes rise as at today. The other one is energy. Your utility bills are about to rise. They are about to go up by an average of £96 per year per household, based on your usage. And this is a good time for you to start finding your way out of your utility providers, start finding the lowest deals you can find, because energy bills are about to go up. And you won't notice it because summer is coming, but yes, energy bills are about to go up, and it's something you need to take note of. The other thing that's going up today, this 1st of April, are prescription charges. Prescription charges are going to rise by 20p to £9.35. So a 12-month prescription prepayment certificate will rise by that amount, which covers all prescriptions for a year, will go from £105.90 to £108.10, about £2 something has gone up on that. So that's something you need to take note of if you are somebody who pays for prescription. Your prescription fees or prescription payment amount is going to rise starting today. So the other thing that's going to rise is the cost of TV license. Don't get me started on that thing. I hate TV license, but it's a requirement. It's the must. If you're watching TV in your house, you should have a TV license, and that's something that's going to rise by £1.50 to £159. Some streaming services have also raised prices, so expect to see those emails from your streaming services to say their prices have increased. And this is my opportunity again to say to you that you don't need to have Netflix, Amazon Prime, Sky, and all of those things at once. Nobody's watching that much TV. So you should try as much as possible to have just one of those things. Car taxis are also going to rise. 1st of April, honestly, bills, bills, bills. We are really living in the land of bills. Look at the number of things I've just said are going to rise. It's really crazy. What car tax, energy bill, council tax, TV license. Oh my God, it's a form of madness. But that's why I said your finances are changing in April, which is why you need to budget appropriately. You need to stay on top of those finances because things change in April. April is an interesting month for money. Water bill is another one that's going to change. So as you are watering your grass outside, trying to get your grass to become the envy of the whole neighborhood, just be aware that water bills are changing, and on average, they might be falling across a lot of councils, but Thames Water is raising their water bill price. So if you're under the Thames Water band, then your water bill is going to increase by £14 this year. Now, today is the last working day of the tax year. It's not the last day of the tax year. The last day of the tax year is Monday, but we all know that there's a bank holiday, tomorrow and Monday. So the last working day is today, but there's a lot of things you can do between now and Monday. And I'm here to tell you what those things are so that you can get on them and do them very quickly before Monday. Those things, you need to do them very quickly before Monday. And the first one is that you need to top up your ISA allowance. So you have £20,000 as your ISA allowance for the 2020-2021 financial year, and you need to top it up. You need to take advantage of that allowance, because if you don't, you're going to lose it. So you need to top up your ISA allowance, and your ISA allowance covers your stocks and shares ISA, which allows you to invest in stocks and shares. It covers your lifetime ISA, which allows you to save up for a house if you are a first-time buyer. Now, your lifetime ISA, if you put money into it before Monday, you get up to £4,000. You get £1,000 from the government. That's £1,000 you didn't work for. Guys, you need to get on top of your lifetime ISA if you have not yet bought property and you are planning to buy. So your stocks and shares ISA is the first one. The second one is your lifetime ISA. The third one is your cash ISA. So these three ISAs, you need to get on top of them ASAP and start topping them up so that you can get the full benefit of your £20,000 allowance. Guys, don't let me just keep talking. This is a lunchtime hangout. Join me, drop me comments, say something to me in the comment section. Let's hang out. I'm hanging out with you. I know you are eating. I know there's food in your mouth. I know. I can't see you, but I know you are eating. So take a minute from your rice, from your jollof rice, from your wrap, from your sandwich, and drop me a comment. Let me know that you're enjoying this. Let me know that I'm making sense to you. And if you have any questions, please just pop them in the comment section, and I'm reading and I will answer all your questions and give it to you as you need. So yes, lifetime ISA, stocks and shares ISA, and cash ISA are three ISAs you need to top up before Monday. If you can do it today, please do it. So there's no age limit for the ISA to put money in, as long as there is. I'm sorry for that. There is an age limit. You can put money in between the age of 21 and 48, I think, and as long as, and you have to be a first-time buyer. If you put money in, if you're over 48 or 49, if you're over that age, you're only putting in money as a pension. It's no longer for you as a first-time buyer. No, sorry, 39. Yes, it's 21 to 39. So to get into a ISA, you just register online. A lot of platforms offer it. Lansdowne investment platforms offer lifetime ISAs. Cooperative societies, building societies are great for lifetime ISAs simply because they tend to also offer mortgages for houses, so they are great for lifetime ISAs. If you are doing stock and shares ISA, I would recommend an investment platform like AJW Invest, Lansdowne, Vanguard, and all of that. But if you are looking for a lifetime ISA, I would say go for a building society. put some money into your lifetime ISA with a building society, you get 25% on top of that. There are very few stocks and shares that will give you that 25%. So if you are somebody who's trying to get off the property ladder, please put money into your lifetime ISA. Now, if you change your mind about buying a house and you want to access the money you've put into your lifetime ISA before the age of 60, there is a charge. And the charge is 25% of the money. They reduced it to 20% during the pandemic, but as of today, 1st of April, another thing that's changing is that it reverts back to 25%. So if you try to take money out of your lifetime ISA for something apart from buying a house, you will get charged 25% on that money. So please take note of that. That it's best to put money into your lifetime ISA if you're trying to buy a property. From 6th of April, if anyone accesses the money early, the penalty will include some of their own savings too. So they will take 5%, it will include your money, they will take it. So take note of that. Now, the second thing you need to do before Monday or before Monday is to contribute towards your retirement. Everybody gets a £40,000 retirement allowance to put money to as long as you belong to a pension plan. You can bring forward unused allowance from previous 3 tax years. So you can bring forward money. You can bring forward your allowance from 3 years. So you literally have almost 100,000 or 120,000 to put into your pension if you have that kind of money. So as long as you're a member of a pension scheme, oh gosh, pension scheme, you can put money into it. The third thing you need to do before Monday is to save for your children. Every child you have has a £9,000 ISA allowance, which you can put into a junior savings ISA or a stocks and shares ISA. This is the time that having a lot of children has benefits, because if you have 5 children, that's 9,000 times 5 is 45,000. This one is for rich people. If you're not rich, please don't go and have a lot of children just because of tax allowance, because you won't like it. You won't find it funny. Yeah, so you have £9,000 tax allowance per child, which you can save for them. So please use up that allowance. You can put it into a junior savings or a junior stocks and shares ISA for your children and invest for their future, so that when it's time for them to go to uni, um, they're not going into a lot of debt because you put away money for them. You can also use your capital gains tax allowance. Everybody has 12,300 in this 2021 tax year. That means that's money you can use if you sell your assets. So if you have stocks and shares that have yielded a lot of interest or a lot of profit, um, or your investment platform, and you want to sell them, this is the time to do it because of that tax allowance. Because whatever profit you make up to 12,003, apart from selling the ones in your stocks and shares ISA, all that is yours. There's no tax on that one. But if you have stocks and shares in a normal account and you want to sell it, you are allowed to sell it and make profit, tax-free profit, up to £12,300. So for my friends who are well-to-do, for my Khashoggi friends who have real money, and you want to sell your asset, this is a good time to do it. If you're selling your property and you make 12,003 on it, it's tax-free. If it's a property owned with a partner, that's 12,003 two times, so 24,600 tax free. So the UK is not as terrible as people like to believe when it comes to taxes. You just need to know what to do to get all the tax benefits that are available to you, so you can dispose or sell any assets such as property and stocks and shares, and you won't have to pay tax on your profit as long as they are below 12,300. The other thing you need to do before Monday is to claim your payee tax refund. So if you think you are due tax refund on your payee, on your salary for 2016-2017 tax year, you need to do it now, otherwise you are going to lose it. So that's that on everything you need to do before the end of the tax year on Monday and before you move on into a new tax year. But I have one other gist. This one is not even investing, it's just gist, because it's a company that we all buy from, is a company that I invest in, is a company that a lot of people invest in, and it's Amazon. Guess what? No, just guess what Amazon has done. Mm-hmm. Amazon has recruited a Twitter army called Veritas, code name Veritas, and this is MI5, CIA's, Secret Service kind of things. These guys, Amazon, they have recruited a Twitter army, and they've called them Team Veritas. And the job of this Twitter army is simply to defend the reputation of Jeff Bezos. As in, guys, Jeff Bezos has an army whose only job on Twitter is to troll you. Their job is to come on Twitter and give you hot hots, give you fire for fire. Anytime you go on Twitter and you do anyhow about Amazon or Jeff Bezos, these guys, these Veritas guys, they will come after you. They've been even advised in a document that's leaked from Amazon to respond bluntly to comments if necessary. So that is their instruction to troll, insult, and just generally bully anyone who speaks up against Jeff Bezos. I'm ashamed. I'm ashamed on behalf of Jeff. This guy is basically bullying people. This is crazy. It's crazy. I'm invested in Amazon through some of the funds I invest in. But right now, I'm disappointed in Jeff Bezos. Like, who is this guy? How can you recruit a whole army to be fighting on your behalf, to be doing rough for getting in the gutter and insulting people? Like, you are attacking freedom of speech. This guy is attacking freedom of speech. I'm calling it protecting his reputation. How is it different from Nigerian politicians? Please, I beg, help me ask. How is this guy different from Nigerian politicians? I mean, you are online paying people to fight your battles. No, Jeff, you are a Nigerian. You have Nigerian blood. I'm sorry. This is terrible. I'm disappointed. In fact, you don't have Nigerian blood. You have the blood of Nigerian politicians. Because we need to define it. Because Nigerian politicians are a different breed. They are not Nigerians. They're just Nigerian politicians. Yes, it's getting in the gutter. But Jefferson was so disappointed, so wrong. I mean, not like I put him on a pedestal or anything before, but I just expected a little bit more from someone like that, somebody in such a role. Now, next gist. This one is for my boss ladies. This one is to tell you that ladies, when we are bossing. When ladies are on top, they just do it. Maximum respect. Maximum respect. Yeah, you got it right. It's veritas. Yeah, you got that spelling right. And you know, when ladies boss, they boss. So there's this lady. There is this very very rich lady, um, who is bossing in a way that is unexpected, and her name is Dennis Coates, CBE. Dennis Coates is the founder and owner of Bet365, a betting company. And what she did this year was that she paid herself 465 million pounds. As in, should I say that again? 465 million pounds. That's how much Dennis Coates has awarded herself as the biggest pay packet in UK corporate history. When women come, we come big, we come correct. This woman is saying, please, so it's my company. I've made the money and I'm paying myself. I'm paying myself. I'm not here to share. I'm paying myself. There is a downside to that though, because it will have been happy if this woman actually paid her staff well, in addition to paying herself. I mean, if you're going to pay yourself 469 million pounds, I want to expect that your employees are the best paid people in the industry. They are the best paid in the betting industry. People are dying to work for you. And I suspect that's not true. I suspect that woman or that company has people on minimum wage, at least. Some people in that company will be on minimum wage, which is wrong. Because if the CEO is earning 469 million, what are you going to do with 469 million pounds? Is the question I'm asking myself. 469 million, 469 million pounds. What are you going to do with that kind of money, honestly? But what she's done is that she's paid herself that, and this woman has consistently paid herself well. She's not somebody who's throwing a surprise. Every year she pays herself well. She sorts herself out, and gives herself that pay. In fact, what she did was that she gave herself a salary of 421 million pounds in the year ending 29th of March, two days ago, while some of us were sleeping. So people were paying themselves 421 million pounds. This life, no balance, bottle please. And then she paid herself 48 million pounds in dividends. So the dividend plus the salary is what comes together to make 469 million pounds. And the company put out press saying that the arrangement or the payment is appropriate and fair, despite sales falling in the firm last year. Come on, there's nothing appropriate and fair about that. We just know that you're paying yourself. You're a boss lady. It's your company, which you started just 20 years ago in Stoke-on-Trent, and You've chosen to pay yourself. So there's no need for you to justify that payment. It's not your fault, it's your company. And that brings me on to something else to you guys who are watching me. If you have a business idea, something you want to do, something you're passionate about, something you believe in, please do it. Please do it. If somebody can be paying themselves 469 million in 20 years, it means that in 10 years, if you run with your passion for 10 years, a lot can happen, my people. Even 5 years, a lot can happen. I mean, we've heard of companies, Flutter Wave, all of these companies. 20 years is a lot. Even Tesla has not been around for 20 years. It was started in 2003. So Tesla has only been around for 18 years, and we all know how fantastically well Tesla is doing. So, and I just told you about a woman who's paying herself for 69 million with a company that she started 20 years ago. So, people, let this be a motivation to you and to me to stick with a passion that we have and run with it, because you don't know what you'll be paying yourself in 20 years' time or even 10 years' time. You don't know. So, that's something I want you to hold on to before I go on to the next gist. The next gist I have for you, this one. You guys have missed flying, Abby. You guys have missed going on holiday. You guys have missed sitting in grimy airports with your luggage, waiting for your flight number, waiting for your flight to be called, eating airport food, and then getting on the plane and then eating crappy food and watching that small TV screen and trying to recline your chair and fighting with the person behind you because I want to recline my chair. I'm sorry, excuse me, need to recline my chair a little bit. Excuse me, could you not recline your chair that much? You people are missing all that. You know why I know you are missing it? Mm-hmm. You have started paying for something called runway dining. Runway dining. Before I go into runway dining, let me respond quickly to comments. How can she not pay her staff well? Yeah. How can she not pay her staff well? I mean, it's painful. I don't understand how Dennis Coates could do that. Pay herself for 69 million. And we're not hearing any noise about what she's paid her staff. But different strokes for different folks. So going on to runway dining. So what is runway dining? Runway dining is when the airline, one airline, opens its doors to a packed plane, and you come in and sit down and eat like you're in a first class flight. You guys, honestly, you guys are amazing. So runway dining is now going for $540 a meal in Japan, and it is proving to be a hit. People are queuing up, tickets are being sold out so that people can go on a plane that's not going anywhere to have a meal. Japan's biggest airline, All Nippon Airways, is offering first class dining on a packed plane at $540 a meal. You know, they started offering the service last Wednesday, and has added more slots for April because they've sold out. They've sold out the meals. People are jumping on packed planes to have meals. Several airlines have been thinking creatively about what to do with the grounded planes during the pandemic. So I hail All Nippon Airways for doing this. Innovative, creative, fantastic way to rise above a situation they couldn't control. The global airline industry is facing its toughest ever challenge to survive amidst this tough quarantine and traveling restrictions. These guys are suffering. It's really crippled their industry, crippled a lot of carriers. They are struggling, and they've been thinking of creative ways to boost their revenue. So it's called Flights to Nowhere. Flights to Nowhere. It's not going anywhere. It's a packed plane, and it's proving very, very, very popular. Along with onboard dining on grounded planes. You just sit in the plane and you have a meal. In fact, in October last year, Singapore Airlines offered diners the opportunity to have lunch on a stationary airbus parked at the city's main airport. And the price tag on that meal was £380. It sold out within half an hour. £380, and it was sold out. People came to eat in a plane that is packed. So Japan's all Nippon Airways is doing their own on a Boeing plane parked at the Aneda Airport in Tokyo, and people are coming in to eat with money that will actually buy a flight. That's how much guys have missed flying. People are coming in to eat, and it's a fantastic idea, I think, for the airline. I mean, for the people who are doing it, I don't know, but it's quite creative on the part of the airline. I mean, last week, British Airways has also made its first class menu available through its catering partner, DO and Co. And these meals, you can order them and they will deliver it to your home. I mean, you guys miss flying to the point that you're going to order first class plain food and eat it in your house. Yeah, apparently, people do. And they're offering you like four different meal options. It's like a kit and it starts from £80. £80. Hey guys. Oh gosh. I think the lesson for me here is that we should learn to be creative as business owners, pivot and turn the table around, as individuals, as entrepreneurs, we should just learn to be creative because this is what the airlines are doing to make revenue while we are unable to fly. Now, one of the things I promised you before I round up this my gist video is that I was going to talk about stocks to watch out for, stocks that you need to be looking at. And earlier I mentioned alternatives to Tesla. I mentioned the stocks that people who buy Tesla have also bought. I've talked about airlines, even though I'm not saying you should buy the airlines, but I talked about them. Now, the stock to watch out for, the first one I want to talk about is something called Home Bistro Inc. Home Bistro is an American company that operates a direct to customer ready-made meal service. So what they do is that they put in the post for you meals that you can heat up or that you have to do a little bit of prep, and it's fresh, it's nutritious. So you order it and they fill your box with like frozen, ready, fresh foods that you just heat up and cook very quickly and eat. Minimal prep, minimal cleanup after. And what's happening is that Home Bistro is taking America by the storm. People are buying it, they are ordering because it's innovative, it's convenient. They don't have to do a lot. Elderly people, particularly, are buying a lot of their food because they can get fresh food, they can get nutritious food. They don't have to go to the market and expose themselves. They don't have to go to supermarkets and expose themselves to COVID or anything else out there. They just order Home Bistro food and it comes and they can, prepare their meals and they eat it and they eat it and it's nutritious and healthy. So this company has now partnered with a bigger company and is now on the stock exchange available to buy, and the price is like 0.92 pence to buy. It's headquartered in Miami, so definitely an American company. Ticker symbol is HBIS if that's something you want to look into to buy. I like it. It's something I'm going to buy, and it's because I feel like it's not going to go away. People are going to keep buying it. People are going to keep buying what they offer. They have a unique selling point, which is another thing I look out for in companies, and which is one reason why I'm saying this company Home Bistro is one to watch out for. The second company to watch out for is Royal Mail. Interesting. So Royal Mail has had many years of witnessing the letter business go out of business because a lot of us don't write letters. There's email now and all of that. People are not putting things in the post unless it's HMRC, unless it's companies, unless it's your NHS doctor. The people are not putting things in the post per se. So the Royal Mail has been struggling. But in the last few years, Royal Mail has taken the bull by the horns and focused on improving its parcel business. So Royal Mail is delivering parcels and doing a great job of it. They are doing great. Honestly, they are doing great. They deliver on time. And this has paid off handsomely, especially with the lockdown. Because with the lockdown, we've all resorted to e-commerce and sending gifts through the post and buying things and ordering things. And Royal Mail has partnered with a lot of companies to deliver goods and services. And so they're doing well. Royal Mail has really improved in the last few years. I think it's worth mentioning that the online shopping boom during coronavirus lockdowns, which has fueled Royal Mail's stellar growth in parcel deliveries, might not remain that way once we are out of lockdown. However, I think Royal Mail has used the opportunity to get the hang of the parcel business properly, to sit on it and own that space and excel at it. I think the icing on the cake for me with Royal Mail is the announcement of a one-off dividend of 10p for the year. They've just announced that, and it shows me that Royal Mail has confidence in their own business. They are also announcing a new dividend policy on the 20th of May. So honestly, all of these things make me feel confident about Royal Mail. The pandemic has worked in favor of Royal Mail. It's benefited them. They've had an increase in parcel volumes, and the transformation for Royal Mail has been spectacular. And this is one share I want you to watch out for. I want you to research it. I want you to consider it. I'm personally very bullish. or about Royal Mail as a long-term investor. Is a company share that I would like to buy and hold on to because I think the company is only just getting started. The ticker symbol for Royal Mail is RMG. So if that's something you want to think about to buy, is Royal Mail. The third company to think about buying is Diego. It's an alcoholic drink champion. So if you're somebody who doesn't like saying stocks, this might not be the one for you. But I'm a big fan of Diego. I mean, people are going to come out and drink. June 21 is coming and we want to drink to stupor. People want to party. Once we all have our vaccines and we are let out of this continuous lockdown, it's party time. People are going to overdo. They are going to party. They are going to enjoy themselves, and Diego is going to benefit from that. Last year, Diego sales fell due to the COVID-19 lockdown, but I'm expecting it to pick up as global economy reopens. In the long run, there is plenty of good potential for Diago, in my opinion, especially due to the exposure to emerging markets. So I think Diago is another good stock to buy and hold for a while. And as a long-term investor, the share price might drop again, and when it does, I'm going to buy it. I'm going to watch out for it. I'm going to wait for it to drop, and then I'm going to buy it and hold on to it for 5 years because I think it's a company that's going places. The other company that I think you should be looking at is Upwork. I think Upwork has enormous potential simply because we have all discovered freelancing. In my view, it has the scope to be the Amazon of the employment world. I mean, as the world of working continues to evolve and more people discover the world of freelancing and doing 2 jobs and 3 jobs, I see this stock growing in value. A lot of contractors have now been released into the market because of the issue of IR35 in the UK. But one of the requirements of IR35 is for you to have more than one client, for you to hold on to more than one job. So Upwork is going to be your opportunity as a contractor to hold on to more than one job, because once you can show that in addition to the contract role that you're applying for, you have clients on Upwork who you are freelancing with, 2 or 3 clients who you are freelancing with, then you are good to go as a contractor without falling into IR35. So that's your way to stay out of the IR35 thing, is for you to be a proper company as a contractor by freelancing through Upwork. So Upwork is going to grow because a lot of contractors will cotton onto that. They will realize that and start freelancing more on Upwork. It has a lot of potential. I should put it out there that it's a volatile one. It's high risk. It's a high risk stock because nothing has been established to show that Upwork is going to do everything I just talked about, or that people are going to do everything I just talked about. So it's my own way of sticking out my neck. Upwork is me sticking out my neck in my investing. So profits are small, share price is volatile, but if you have a bit of money, throw it at Upwork if you want. Now, the outlier on my list, and it's the last one on my list, is Rolls Royce. So a lot of people have been buying shares for airlines again, British Airways and all of those things again. They started buying them because they think the market is going to recover. I'm still not going to buy the shares of airlines because I'm still on the fence on how well they're going to recover, considering how much debt they've gone into in the last year and a half. So I'm still not going to buy the shares of airlines, but I'm going to buy the shares of Rolls Royce, or I would recommend the shares of Rolls Royce simply because Rolls Royce is an engine maker for a lot of airlines. So they are not. Their business is not how well the airlines fly or whether they fly at all. It's that they have a long-term maintenance contract with airlines. So the moment the airlines start flying, they have to start paying Rolls Royce again, and Rolls Royce is going to be making its money, which is why I would recommend Rolls Royce over actual airline stocks, long-term maintenance contracts, all of that. The relationship Rolls Royce has, the fact that these companies need Rolls Royce in order to fly, they need Rolls Royce products in order to fly, is why I would invest in Rolls Royce over investing in the actual airlines themselves. So I've spent quite a few minutes with you guys, a little over 40 minutes now, hanging out with you, sharing a lot of news. I've talked about Tesla. I've talked about the naughtiness of Amazon and Jeff Bezos. I've talked about Dennis Coates and paying herself that huge amount of money while not exactly increasing pay for her staff. I've talked about the 5 stocks and shares you should be buying. I've talked about the Deliveroo flop that's happened in the last 2 days and the fact that the IPO has not performed the way we affected. I've shared a lot of things with you guys, and I hope you've enjoyed hanging out with me. If you're watching me on YouTube and you haven't subscribed, please do it by pressing the red button on your right. Don't forget to press the bell so you can get notifications every time I share a new video. I'll be back again on Monday with a video for you guys, something for you to enjoy, something to help you get on top of your money. Please don't forget, a lot of things have changed 1st of April this year, and a lot of things are also going to change from Monday when the financial tax year ends. So please take advantage of the tax benefits available to you before the year ends on Monday. Until my next video on Monday, have a fantastic Easter break. Have a fantastic Good Friday. As my doctor said, it should be Bad Friday because Jesus died. But no, Jesus woke up on Sunday, so it's Good Friday. Have a fantastic Easter holiday. Enjoy the bunnies, enjoy the chocolates, have fun. Take it as an opportunity to rest, to recoup, to re energize, and enjoy yourselves. It is an opportunity for you to order an e copy of The Lost Khaki Girls, which is a book I wrote. It's an easy read. It's a book you can read while lounging in your living room, in your bedroom, and just taking it easy. It's a great book. So take opportunity to order it and read it and enjoy yourselves. I'm in my inbox. I'm responding to emails. I'll respond to your comments. So drop them for me if you want to. I love you guys. Have a fantastic weekend, and I'll see you again on Monday. If you want to see more live videos like this, which I think I really enjoy doing, as compared to just uploading a video, please let me know in the comment section, and I'll come back again maybe next Thursday with another live for you guys. Until I see you again on Monday, it feels like I don't want to go. You take care of yourself, and bye bye.